Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news there are positive signals that the Phase 1 trade deal may be making real progress. But first, the US Conference Board is reporting that November consumer confidence slipped in the US, and for the fourth month in a row. Sales of new houses in October were strong in the US, similar to the September level, but more than 30% higher than October 2018. That means new home sales took 11.9% of total housing market in October 2019, and that is up from 9.6% a year ago. American inventories are rising. Wholesale inventories are up 3.9% in October from the same month a year ago. Retail inventories are up 3.1% on the same basis. And the US merchandise trade deficit has narrowed in October and more than expected. And that is because less trade is happening. Exports were down 3.7% and imports were down 6.9%. Together, that's a $20 billion less trade in October compared with the same month a year ago. Also falling, and in fact slipping into negative territory, is the next Fed regional survey, this one from their mid-Atlantic states. Those lower imports don't seem to be being replaced by domestic factory production. In fact, in a new research paper by New York Fed economists, they have found that almost all the costs of the tariffs imposed by Washington on China have been paid for by Americans. Meanwhile, China offered its most positive message in recent weeks that trade talks with the Americans are going smoothly after a phone call overnight between the country's top negotiators, raising the prospects for a limited deal. This time, equity markets are ignoring the news, though. There is widespread alarm, however, at China's renewed coal expansion plans. A new report said that China's proposed coal power expansion through to 2035 means that their total coal power capacity alone could far exceed the total capacity allotted to the entire world under the Paris Agreement. In Canada, their rail strike may be near an end, and it's cost Canada heaps so far. In Australia, there's been yet another fall in consumer confidence there, pushing their index down to 106.8. Confidence was down again last week, falling 2.8% on top of the prior week's 1.1% fall. US Treasury 10-year yield is now at 1.74%. That's another 2 basis points lower than this time yesterday. Gold is up $2 to $1,459 an ounce. US oil prices are higher by nearly $1 at just under $58.50 a barrel today. The Brent benchmark is just under $64 a barrel. And the Kiwi dollar is continuing a stable run against the greenback, up slightly to 64.2 US cents. On the cross rates are also firmish at 94.6 Australian cents, and against the euro, we're firm at 58.3 euro cents. That puts the trade-weighted index up to 69.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.